Good morning, it's Jonathan Barrett with this week's Market Buzz. What's Donald Trump up to? Seems to be setting the cat amongst the pigeons with a lot of things going on. He imposed 100% tariff on pharmaceutical imports. Not really good for the UK because they export, or the US import 3.2%. US inflation PCI moderates, which is not too bad at all. The month-on-month came in at steady and the year-on-year lower at 2.7. Opening the Fed to lower rates again. With that core PCE index, we'll have a little bit of a talk about that. I think if anything that does support two more rate cuts, as I've mentioned. Michigan Consumer Expectations Index fell to 51.7 versus last month's 55.9. Now, that's a leading indicator, so we're going to do a little bit more of a deeper dive on that within the recording. Also, we've got in China, total industrial profits continue to rise for the seventh month in a row, and you can see that that stimulus packages coming out of the PBOC are actually seem to be getting some traction, which is certainly good for Aussie, certainly good for commodities, which would also help the Aussie dollar. And oil posts its largest weekly gain in over 3 months. Now, that's, I think, quite positive. I think we have got a low there, regardless of what happened in OPEC Plus. I think the market, when we look at demand and optimism within some of these economies, then upwards and onwards she goes. On gold, it sort of retreated from its highs only recently, recent highs, which are record highs. So maybe a little bit of consolidation there is on the call for the next couple of trading sessions. Okay, well, let's have a look at really generally what's happening out there. I think the data we had from the States last week, and particularly on Friday night, sort of indicate that the labour market remains soft, but inflation also is coming under. The inflation is also coming under pressure as well, particularly with that PCE index, which actually showed things sort of starting to get a little bit more sort of within the range, but still way above that 2% that the Fed's looking at. And to me, that remains a concern because inflation remains sticky. I also don't feel as if we've had enough data yet to really understand the impact of the tariffs. And to me, that does worry, because it does worry me in a sense that we haven't really seen or have enough data to conclude that the tariffs are inflation, which we know are, and we've seen that historically. So I think there's something happening there, but we've got to be careful of. I think the idea there is when we look at the consumer sentiment numbers, that to me is the concern that I do hold. And I think when we look at the Michigan number, where it fell to 51.7, from that higher number there of 55.9, if we do get below 50, then we know that sentiment is quite negative. And when you look at historically where that's been, and it wasn't really until sort of like December last year that we were up around about 75 points, or just under 75 points. And to see it come back so dramatically and a trend, I think is a little bit of a concern, because that does feed into sentiment in the consumer. And I think that consumer sentiment there sort of feeds into the overall economy. And to me, that is a little bit of a concern. When you look at sort of where the growth comes out of the economy, and that's obviously from a consumer-led area, and a number like that is a little bit of a worry. Let's see what the next couple do, but you'll see we have a little bit of a dive on that. We explain a little bit more in the report, and you can see that being negative is not that good. Anyway, let's see what happens from there. Okay, another interesting thing that came out was the inflation expectations, which actually eased slightly as well. That's reinforcing, I guess, what we're seeing, weaker sentiment, but it's also reinforcing, that feeling about inflation and that the Fed can afford to lower rates. Now, we've seen one rate. Now the market is looking for another 2 rate cuts this year. I'm quite skeptical about it, but if numbers like this continue, then the chances are we'll get one more. Okay, so we've talked about that. I guess if anything there, let's see what happens this week, because we do have quite a lot on this week, and a lot of critical economic releases. I guess the most important one is the employment data, and let's see what happens towards the end of the week. See what the labour market is actually doing. As we know, there are concerns about it weakening, hence we've seen the Fed Powell actually move on rates, because that is a worrying sign. So if you combine a weaker labour market with weak sentiment, you know where we're going. So let's just see what will occur. We also got JOLTS job openings, Challenger job cuts, so an ADP employment report. That's going to be quite important to give us a little bit of feel as to what's happening out there. In Europe, we've got the Eurozone inflation numbers and national CPI there as well. That'll also give us a bit of an imprint, see what happens in inflation in Europe. I do actually think things will be low there because the economies there are a little bit softer. So I think if anything there, let's just, it should be quite an interesting week. Okay, so let's have a look at a few of the trades now and have a look at where we position in what we feel. Just to know, I'll just move that. We did have a bit of a trade focus on the Aussie Swiss. Now that's a trade we've had for some time, and I thought it was wise we just have another look at it and so you can get a sense of what we're feeling. Now sometimes some of the transactions that you do, or the trades, the positions you take, it's always good to have a little bit of a refit and a reassessment of where we think the market will go. There we go, we've got the Aussie Swiss and the Aussie Swiss there, as you can see, right at these lower ends. I actually like this type of formation. And I think it will just go sideways and then head up onwards. 53.10 is this high here, and I'll just sort of so you can see it. There, it's this high here, which I want to see it break. If we can see that break, then we're heading higher. Now, I don't know, see if we get weekly data. I don't think it will show that. So I don't think we'll see good weekly data. But when you do get a chance to look at the weekly chart, it looks quite good. And also good forms of divergence in the momentum indicators. Here we've got a little bit of a bounce and a little bit of divergence there. That's on the weekly chart, not on the daily chart. So if anything there, I'd like to look at that. The Aussie Swiss to start to trade higher, and then we'll regain some good profits on that transaction. Okay, let's have a look at the Aussie, and it's another position we've got. And I do like the Aussie. It's been a bit of a tough trade, there's no doubt about it. But I think, as you can see, there we go. As you can see, a bit of consolidation around these levels here is okay. 64.67 is the lowest I'd want it to get. But I do think that if anything there, we can hold. Once again, momentum indicators down the bottom end look quite positive. So if anything there, I'd like it to spend more time going sideways, create that base to trade higher. Okay, let's have a look at the S&P. And remember, we do have those short positions. And as you can see, we're right at the top there. A lot of divergence here starting to show in terms of pricing. Something we'll crack at some stage. We have reduced positions to a manageable level. I'm quite happy with that, and we'll just wait and see. You can see the same thing when you look at the Dow. Right up there, just going sideways. Let's see how that unfolds. Local market, same issue there. Actually looking not too bad. Sideways price action. And we do have just a little bit here in terms of divergence, which indicates that we will head a little bit higher over the next couple of days. But let's see, once we trade up around that 9,000 level, it's certainly a big level to look at. Okay, let's have a look at oil. Oil has traded onwards and upwards. And as you can see there, I think we've got good support down at 65.20.30 level, and we're at 69.17, and I actually feel that it will have a bit of a lift. Did a report last week on that, and I think you'll find that crude ready to go higher. Remember, we are coming into the winter months, so expect some volatility there. Okay, so that's the Brent contract. Let's have a look at good old gold. And there we go. And looking at the gold price, right up there, still on record highs, 37.70. Not much we can do there. A little bit of divergence starting to show. It's something we did outline here, and that to me is a worry because that normally sets it up for a bit of a correction. But let's see. But wouldn't mind a little bit of correction there if that's the case. Silver, and silver we love. As you can see, it just continues to trade onwards and upwards. 50 is where the market's eyeing. A lot of volatility here, and I expect that to move. It's been a good trade there. I like it a lot, and we will also move our stop losses up there in case the market reverses. One key note on silver, if it is a bubble forming, it's going to be quite volatile towards the downside, so just be careful. I always like to sort of see if you can just grab some profits as she trades, which is good. Okay, so really, I think that's about it for this week. Once again, lots of volatility. We never knows what's going to happen to Trump. He's always out there doing things, but we just got to be ready for it. But that's it. That's about it from me. Hope everyone has a great week trading. Talk to you later.